Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Mark Marex, who's with the Nasdaq Index Research Team. We're going to learn about the Nasdaq 50 and some of his observations that he's seeing on the chart. Mark, it's great to have you with us as always. Thanks so much for joining on Trade Talks.
Great to be here. Thanks for having me.
And Mark, tell us about the Q50 and what you're seeing in terms of year-to-date performance.
Yeah, so I thought it'd be a great opportunity to talk about this index. It's not widely known because it doesn't have a product tracking it, not yet anyway. But this is essentially, the Nasdaq 100 looks at the 100 largest non-financial companies listed on the Nasdaq exchange. These are the next 50 stocks that would be eligible for inclusion into the Nasdaq 100. So we've been calculating this index since about 2007. It's been a really, really consistent outperformer. And, over the years, you can actually see a lot of well-known names. They start out in this index, and as they mature and get bigger, eventually move into the Nasdaq 100. In terms of year-to-date performance, you can see, the Nasdaq 100, the NDX is still the best performer among the big market benchmarks. But the Q50, which is with the index ticker symbol NXTQ, is sort of right behind, in line with the Nasdaq Composite, up about 8.5% for the year as of yesterday's close, not too shabby. And below that, you can see really, really still massive outperformance versus both the S&P 500 and the Russell 2000.
All right, Mark, let's take a look at our second slide here where you have this sector breakdown. Is it similar to what you see in the Nasdaq 100, or are there some smaller intricacies we should be reviewing?
Broadly pretty similar. Very strong allocation to tech, but not quite as strong with tech as the Nasdaq 100 is. The main difference there is made up for industrials and to some extent healthcare as well. Larger allocations for the Q50 there. So again, if you're looking for something that is broadly similar to the Nasdaq 100, but measures a kind of different segment of the market, both in terms of slightly smaller market caps and a little bit better diversified across sectors, that's what you get here with the Q50. And also, like the Nasdaq 100, no financials. You can see that the composite is the only index here that's got financials exposure.
Mark, on your final slide here, we're looking at position sizing. What can you discern from this chart?
So this is a pretty cool chart because it tells you a couple things, right? One is you're looking at the 50 components in the Q50 average position weights versus the 100. The 100's got a really, really fat tail at the upper end of it, right? It's got 4 components that are 8, 9, 10, 11% each. Those are the well-known, not exactly FANG because Facebook's number 5, but certainly Apple, Google, Amazon, and Microsoft. And the thing with the 100 is when it outperforms, it's usually being driven by those top 4 or 5 names. So if you're long-term bullish on the mega cap end of the market cap spectrum, certainly you want to continue to follow what's happening in the Nasdaq 100. But there's been this kind of constant drumbeat over the past couple years of more regulatory scrutiny coming in, especially from Europe, but we're starting to see that more and more in the US as these firms at the top are really just dominating the space for search and for advertising and media and cloud and you name it. They're by far the biggest players in those areas. You might start to see a lot more scrutiny from antitrust and from other kind of regulatory agencies that maybe are not as long-term bullish for the 100 as a whole. But for the Q50, you don't really have that, right? You've got the largest component at just over 4%, the smallest at just over 1%. So it's a much more balanced index. Market caps are, in the range of like 7 to 25 billion. So what I like to refer to this range as is really kind of like an upper middle sweet spot where, you've got some mid caps, you've got some large caps, but not the megas. And, again, because they're listed on the Nasdaq exchange, these are still very, very tech heavy, very innovation driven for the most part, high growth companies, and it's a really exciting space to follow.
All right, great, Mark. Thanks so much as always for joining me on Trade Talks.
Thank you very much. My pleasure.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.